Hi traders, in this video I wanted to show you that price is fractal. Now what I mean by that is that we have time frames that we can choose from. We have the weekly time frame, the daily time frame, and so on and so forth. But to me, price moves in a very similar way on all time frames. I'm going to show you that now. So one thing I like to break the market down into is simple phases. So we have the primary phase and the secondary phase, and that depends as well on the direction of the market. So here I have an example on Aussie Swiss. Now after price broke and formed this new low after being in a upward trend, we started to see trend shift. Price broke below the 50 moving average as well, so I'm looking at a bearish trend. That means the bearish legs in the market are now the primary phase and the pullback phases are the secondary phase. Okay, now my job as a trader, and especially the way I trade, is to find trends within the market. So I can see that we have a downward trend. I should be looking to short this market. So where is the most optimal place for me to try and sell this market? Well, it's these highs, right? Because those are where the market turns around. But how do we spot these moments? How do we get into these trades? Because we don't know on this daily close here. I don't know if price is going to move higher, or I don't know if price is going to move lower. I just don't know. But what we can do is put some steps in place to understand what happens at these points. So what I'm going to do, I'm going to step down to a 4-hour time frame, okay? Because in my theory, when the market is in a primary phase on a daily chart, we would see a downward trend form on the 4-hour time frame. So in this primary phase on the daily chart, we will see lower lows and lower highs, like the overall time frame. Okay, when that changes is when the conditions change. So when the market stops making lower lows and lower highs, and then begins to make higher highs and a higher low. Okay, that changes again when the market creates a new low. Okay, in here, this is then classed as a primary phase, making the lower low, lower high situation. When that breaks, market pulls back, making that higher high, higher low situation, therefore is the secondary phase. So what I'm trying to do is find opportunities in the market for these turning points. Okay, now this can be pretty difficult to do because when I'm looking at this kind of downward move here, let's take a look at this example. Markets broke below the 50, fantastic, but technically we don't get the new low form until here. How am I going to trade that? Because if I just trade the break there, my target has to be this low risk reward ratio isn't good. So what we can do is just go a little bit further. I like to step 2 time frames down. So if I'm trading the weekly, I'd look for, if I'm looking at weekly moves, I'll be looking at 4-hour trends. If I look at the daily, I like to look at the hourly chart trend. Okay, so this is where we need to add a little bit more discretion in as well, because we can see sometimes that the market will give us false signals. Okay, so let's start out with the original one here. The market is pulling back. Okay, it's giving us a better price to get in this overall downward trend. Look what happens at the top here. I'm just going to zoom in. You'll see that we get that break in trend structure. The market is making higher highs and higher lows. Where does that break? It breaks when the market takes that low there. So that to me would be the ideal area to look to short this market. Place a stop loss above our swing highs. I like to add ATR on and things like that, but I'm not going to get into that in this video. And I'm going to go target the previous area of support, okay, because that is where buyers step back into the market. So I'm going to look to try and target down towards this area here. If we go take a look at another example, okay, now we can see the market is making higher highs and higher lows. Okay, doesn't take out that low. That's super important. If we break below that low, then I would expect the downward trend to continue, but we do not break that low, and then the market continues. We have a little consolidation to break higher, again another little consolidation there. So the market technically then pulls back. There's our new low. Okay, that's the new low. The market breaks that low, right? That's our entry trigger point up here to try and get back into this potential primary phase. Stop loss above the highs. Again, where do you target? You target the previous lows. Now, you can see that we had this kind of pause in here, and it obviously depends on how you want to trade the market, but I would be looking to target down towards this area here. And you can see after a period of time, the market makes its way down to that point. Now, this is great, obviously, in hindsight, but what I'm trying to show you is that we're potentially setting up this move again now, right? We're in this downward trend on the daily chart. We have this price below the 50 moving average. Where does that condition change? For me, it changes if we break and close above this daily swing high. So in theory, I could look to still try and sell this market down towards these swing lows. All right. So if I go to the hourly chart, I can see that we're in the secondary phase of this market. Why? Because we're getting higher highs and higher lows, okay, in and around these areas here. But what happens if the market does this? Boom, breaks that, okay? If we get that, then could we be entering a primary phase again? And could we see the market trend to the downside? Now, I say that this is fractal, okay? So hopefully you've understood that. Leave the video a thumbs up if you have. But I say it's fractal because you can do this in multiple ways. Let's say you don't trade the hourly chart because you don't have time to trade the hourly chart. What about what the weekly chart is doing? Okay, let's look at the primary phases and let's look at the secondary phases on this move. Okay, so obviously it takes a lot more time to develop, but this would be our primary phase. Okay, just looking back in time, that move here, okay, we're below the 50 moving average. We've broken through these lows. We have a secondary phase which lasts all the way up into there, okay, and then we have our primary phase again. So I'm just going to move some of these out the way. Okay, let's get rid of some of these on here, and we have our primary phase again, right? So in this scenario here, we're looking for, again, those kind of, where are those turning points? Now, you might get a couple more false signals on this time frame because it's a higher time frame, all right? So if we drop down to the 4 hour, what do we see? Okay, so look, market breaks trend here. It makes lower lows and lower highs. Now, you may say that that's a new high there, but it's still within that stretch here, okay? And the market continues to the downside. It really changes when you get this head and shoulders pattern down through there. Market starts pushing to the upside, okay? Now here, again, you've got this market that starts plunging to the downside, breaks through multiple lows. So this is where I say that you might get into a position here, okay, looking for that continuation to the downside. You may or may not take some kind of profit because you are very close to kind of hitting your targets down at this area here, right? So that might be a TP point anyway. But let's say it wasn't and price came back, then that would be a potential losing trade, okay? Before then, you had the actual move. So you see market makes lower lows, lower highs. It breaks trend again here. If you had shorted on that break, stop losses above those swing highs plus ATR, remember. So you want to go in above the high plus ATR above the high, then at least you will still be in this trade and the market continued to trade to the downside, okay? I like to use more of the sort of combination of kind of looking at what the weekly is doing, what the daily is doing, what the hourly is doing, because I want to try and trade markets throughout the week. But if you don't have time to do that, you can do that throughout as well. But let's have a look at even lower. Let's take a look at a 15-minute trend. This is a 15-minute trend on Aussie Swiss. I wouldn't recommend necessarily looking at this chart because spreads can be quite high. But look, you have a bullish trend here, right? So what do we have? We have a primary phase. secondary phase, primary phase, secondary phase, primary phase, right? So if I just highlight this little area in here, okay, what I'm going to show you is that if we can dive in 2 time frames lower, and I'm going to go to the 1 minute time frame here, I'm going to show you that again it's kind of fractal in price. So we had that bullish primary phase first, and you can see the market's making higher highs and higher lows. That condition changes, we get the secondary phase, okay? That condition changes, we get the primary phase, all right? That condition changes, we get the secondary phase, okay? So, you know, to me, price is fractal in that sense, and it's just about finding what you prefer to trade, what time frames suit your personality. For me, I like to take a little bit more time to think about why I'm getting into a position and how I can get into a position. I've just actually placed a trade on Aussie Kiwi, and I want to show you why that is, okay? So I'm actually short here, okay, with my stop losses above swing highs, targeting down at these swing lows. The reason why I'm in this position is because we have a trend here. The market is breaking to the downside. There are other influences as well. I use macro backgrounds. I use currency strength meters and sentiment indicators as well to kind of build a bigger picture. But you can see the market's making lower lows and lower highs. We have a primary phase, secondary phase. Are we turning now back into a primary phase? Potentially. I don't know whether this trade is going to work out or not. I just know that this allows me to apply appropriate risk because it matches all my criteria. If I go to the 4-hour time frame, what's happening? Well, we're breaking through previous lows. If I go to the hourly chart, you will see that the market has now completely changed trend here, okay? So we're getting those higher highs, higher lows. Again, we came down into this low area here. We didn't get a full close below those lows. Market continued to push higher. We consolidate, boom. There's our breakout. I took it a little bit early on this trend line break, but still the same rules apply here. So I like the idea of Aussie Kiwi moving lower, but I wanted to show you that price is fractal. This is how I look at the markets. I look for these kind of daily trends. I try and gauge whether we are going to get that turning point by using the lower time frame as my visual aid. So hopefully that makes sense to you. If it did, leave it a thumbs up, subscribe if you are new to the channel, and I look forward to speaking to you soon.